Well, at the end of 15 minutes of trading, the markets are quite flat, but very big moves on the mid-cap space, you'll have to say, and so bears repetition. Stocks that are moving up, Transport Corporation is up significantly, Kesoram Industries is up, Alstom has been doing very well, NHPC has been doing well, Idea, of course, that's a big stock, Godrej Consumer, all those stocks doing reasonably well at this point in time, but mid-caps is almost racing to a 1% gain at this point in time, and the advanced declines are now almost 3 stocks in the green for 1 in the red. It's a big day, and of course the Apollo Tyres, the Voltas, Nalco, all those stocks also doing very well. Very big day, very big moves coming in the mid-cap space. But it's the earnings season that we are heading into, and some veteran advice could always be useful. Let's welcome our market master for the day, Krishna Kumar Karwa, Managing Director of Emkay Global Financial Services, joins us. Good morning, Mr. Karwa. Thank you very much.
Good morning.
For joining in. Well, we are flirting with near all-time highs. If you just deduct the bank nifty, the markets have been doing very well. But do they have the spunk? Do they have the verve to go beyond the 9,000 mark with Elan? Is there enough encouragement in the earnings numbers?
See, honestly speaking, as far as the quarter 4 earnings that you are asking, then there is not much of an expectations broadly from most of the corporates in terms of the quarter 4 earnings. So the rally that we have been seeing of late is more a function about expectations about things improving maybe in the second half of the year, and in anticipation of that there have been robust FII inflows and domestic inflows which we have seen, and that's the reason why the stocks are so to answer your question whether the rally can continue further because of earnings, I think it's no. But more than that, I think it's going to be the expectations, the positive sentiment which is important.
Mr. Karwa, good morning. On that note, actually, the sentiment has been positive because of a lot of macro improvements and work that is done by the government on the ground in the last couple of months. Purely based on that trigger, do you think this market can take out new highs before the first half of the year is out?
Possible. You have to also look at it from the perspective that India is underinvested as far as equity investments are concerned, and earlier investors, the domestic investors specifically, had alternate investment opportunities where they were making good returns, whether it was gold, whether it was real estate, whether it was fixed income. Going forward, currently the way it stands, I think equity seems to be the best opportunity for investors to be invested in, and the momentum has got created. No doubt ground realities take time to improve, but Indian investors want a piece of the action as far as equities are concerned. So if we continue to see inflows, then there is no reason why we should not be able to make new highs. But to sustain that, obviously you require good corporate performance to support the improving valuations. As far as FIIs are concerned, I think they are also very positive on India, and amongst the emerging markets, probably we are in a sweet spot, and most of the global markets also seem to be doing well. So we are also benefiting from increased global liquidity.
In your assessment, this global liquidity, which is at least partly driving the rally, is intact? One shouldn't worry too much about that liquidity now?
So honestly speaking, what is important is finally, as you initially said, is the valuations part of which is most important from an investor's perspective. And liquidity, yes, currently it is very strong, and hopefully it should continue to remain strong. But investors need to balance out between the liquidity-driven value and where you believe that maybe valuations are getting overstretched. So currently I believe that yes, we are being supported by liquidity, global liquidity supporting us, but valuations are moving up, but are they in a stratospheric zone or are they totally out of whack? I don't think so.
Where do you still see pockets of undervaluation? Any specific sectors, anything that you can give us by way of hint, since you won't point out to specific stocks to us?
Yes, I mean, if you look at the way your financial services sector, which is almost 27-28% of your Nifty weight, within that you have a total disconnect between the private sector banks and the public sector banks for obvious reasons. But having said that if you believe that the economy is going to improve and the question of bad assets, etc., will get resolved over a period of time, then public sector banks do offer you deep value for a long-term investor. So that's one total segment which market currently is ignoring for obvious reasons. I don't know whether it will take a few more quarters for things to improve or whether it could be a longer time frame. But from an investor perspective, I mean, there's a deep value over there. Then if you look at the way your two-wheelers, the valuations of many of the stocks in that segment, again the valuations seems to be, there has been some slowdown in performance and that's the reason why valuations are where they are. But from a longer term perspective, that whole segment possibly offers you a good investment opportunity. So I think there are opportunities like that. You have your oil marketing companies, they are benefiting because of lower crude oil prices and absence of subsidies, etc., plus improving GRM margins. But valuations wise, I think they still offer you opportunities for good appreciation from current levels. So I think there are pockets which where investors will find opportunity to invest from a medium-term perspective. Momentum stocks, obviously, they are slightly overvalued and they continue to drive the momentum.
Okay. So you mentioned two-wheelers and oil marketing companies, but what about some of these pure-play oil and gas names, the likes of Reliance, ONGC, etc.? It's expected to be a good quarter for some of these players. So would you increase your allocation into any of these names?
I would think so. I mean, I would agree to that broad segment. I think I should have added, apart from the oil marketing companies, even the companies like the names you mentioned. So they, I mean, this quarterly numbers should be good, and even from a medium-term perspective, I think these stocks offer good opportunities for investors. Reliance, if you ask specifically, I think a lot of investment that they have done over the last 3-4 years will start delivering returns in the next few years. And valuations are attractive, so it should give returns to investors.
Okay. Actually, Mr. Karwa, you spoke about financials, yes, but incrementally, what would you go long on?
Okay, within the financial services, or, I mean, sorry, I didn't understand the question.
While you spoke about one sector, generally, if you have to go long incrementally, where would you place your bets sectorally?
Incrementally, yes, as I said, that financial services, according to me, offers the best opportunity to put further money as far as from an investment perspective is concerned. So that's one segment that should deliver good returns. And another sector which I believe the opportunities are there is going to be in your engineering cap good space. As your capacity utilization keeps on improving as economy picks up, that's one segment which should see improved order inflows and can give incremental good returns to investors. So that's another segment that you should be from. And there the number of companies in that segment is a big number as far as the small cap, mid cap segment is concerned. So individually there could be opportunities for investors to be able to invest in that segment.
Would you get into real estate? Well, today, probably responding to the news of HDFC and SBI cutting rates, we have seen some decent moves. Parswanath, for instance, is up about 3-4%. Ansal Housing is 3.5% up. I saw HDIL, of course, it's been rising anyways, but that's also reaching out. Realty is such a beaten sector. Is there a place to make money here in the stocks?
Right. In the real estate segment, what is important is to look at the quality of the balance sheets of the players that we are looking to invest in. So there are some names where the balance sheets are very robust and they are in segments or geographies where demand continues to be reasonably strong. So those segments, I think that those stocks should continue to deliver returns. But where the balance sheets are debt laden and a lot of restructuring is required to be done, for those kind of companies, I would be very careful. Also, I think companies which are more NCR focused they seem to be struggling as far as the sales itself is concerned. So maybe returns on those kinds of companies kind of back-ended and may take more time than normal. So I think real estate, in terms of returns, probably it's lower on my scale in terms of the opportunities.
Okay. One more pocket that has been doing well, despite problems in the rural economy, some of these agri-based companies, the likes of CI Industries, etc. I know your firm tracks this space very closely. What is your own view on the agri stocks and whether one should continue to buy it despite the slowdown in, the rural economy?
See, we have been very positive on the agrochemical and agri-input space for long, and corporates have delivered returns. I think what has happened is that many of the corporates, their business models have evolved, and a lot of contract manufacturing, custom manufacturing, etc. Is also an important part of many of these companies. So that adds a lot to the robustness of the earnings of some of the corporates. But corporates which are purely focused on India-focused agrochemical companies, they have faced headwinds owing to some poor monsoons and those kind of. But that should not deter investors from a longer-term perspective, because agrochemicals is the need of the hour in terms of improving productivity and the yield. And more new products are getting introduced by all the corporates. So from a medium-term perspective, we continue to be bullish on most of the agrochemical companies in that space.
Okay, let me invite your comments finally on two spaces where the Modi government appears to be on the front foot, at least going by the budget. They sanction maximum money to railways and roads. How would you play this as a stock investor?
As far as railways are concerned, yes, the need of the hour was in terms of improving the infrastructure, but I'm not too sure about the number of companies that you can, or corporates that amongst the listed space that you can play the railway capex cycle. So that's the challenge. So on a top-down basis, yes, everything should be bullish on, but the number of stocks are kind of restrictive. But on the road infra and the construction space, I think there is a huge number of opportunities in terms of EPC companies or road BOT companies, and they have appreciated, but the opportunity seems to be very big for most of the companies, and most of the companies who had issues on their balance sheet have been able to raise equity money to some extent to provide for the growth which is expected to available to them in the next few years. So I think between the two sectors, I would say that investors would have more opportunities in the road infra and the EPC space to be able to play the story.
All right, Mr. Karwa, it's always a pleasure listening to you. Thank you very much for dropping by this morning.